Hello, good afternoon. You're watching Market Fatafat on ET now with me, Vinny. Along with me, Shrishti Sharma as well. Shrishti, a very good afternoon to you as well. And
good afternoon, Vinny.
What we saw when we were doing buy now, sell now, I believe, was that the markets actually managed to turn to the green. But again, now within those 1.5 hours, it's back on the red. And look at it, just before a few minutes, we saw that the Nifty is fallen back again in the red, trading with a cut of around 0.07%. 18,253 around levels is what the Nifty is trading at. Let's look at what Nifty PSU Bank is doing, because that was also a laggard as well. And seems like that's continuing to see a downfall as well, down with cuts of almost 1.8% in trade. Yes, off the day's lowest point, but still down and out in trade. Nifty Metal too seeing nothing exciting in terms of a exciting day there, down almost 0.5% there, while in terms of the gainers, we only have Nifty Media, Energy and FMCG, which are managing to hold on to some gains. Nifty Media gaining almost 0.5% in trade. Energy, 0.4% uptick there. While in terms of the FMCG, 0.3% is what we're seeing coming in for these individual names. Just in terms of movers coming in for the Nifty 50 in terms of the percentage change, let's look at the top losers: UPL, SBI, Dr. Reddy's, all down and out in trade, while among the gainers, what you have is IndusInd Bank, because there's a note from UBS, HDFC Life and Power Grid managing to hold on to some gains there, Shrishti. But on that note, let's just get started with all the stocks that have been buzzing in trade, either on the back of news flows or on the back of technicals. On the technicals, today we're joined by Aditya Agarwala, while from the research team, today we have Ashesha as well as Harsh joining in with us. A very good afternoon to all three of y'all. And I'm going to be starting with the first stock, that's Hatsun Agro. This one is in focus on the back of its Q4 numbers. Weak set of numbers is what came in from the company in the Q4. Mainly the high procurement cost is something that overall impacted the numbers of the company. Revenues saw a growth of around 10%, while in terms of overall the profitability of the company, that had seen a sharp decline as well, while the operating performance was quite weak as well. Look at the profits of the company. They're down by almost 17%, while the margins are also seeing a decline of around 100 basis points. Higher procurement cost inflation in freight as well as packaging costs being higher weighed on the gross margins of the company, and in turn went down to the EBITDA margins of the company as well. Other than that, the unseasonal rain also is something that impacted the demand of the company, and especially that is a peak season in terms of the value-added products for the milk. That is something, the dairy products is something that impacted Hatsun Agro. Keeping an eye out on that one, analysts are expecting some pressure to continue in the upcoming quarters as well.
Okay, but let's move on to the second stock in focus, and for that, Aditya, coming to you for the next one, you have picked up Muthoot Finance. When the markets are in red, this particular counter is still holding itself in the green. So is that a buy at this point in time? What's the outlook? And a very good afternoon to you.
Hi, Shrishti. Good afternoon to me as well. Oh, definitely. If you take a look at the way Muthoot Finance has been moving past couple of trading sessions or maybe a week, it's more of a consolidation and breakout from a consolidation in the recent times. And it is trading above its 200 DMA, Shrishti, after a year. So that is a very big positive sign for the stock. And it's sustaining above its 200 DMA. So if it continues to trade above its 200 DMA, I believe stock can test levels of 1150 to about 1200 on the upside easily in the near term. Also, if I take a look at the technical indicator, which is the RSI, that has taken support at the lower end of the bull zone, and from there it's turned northwards. So all in all, looks like there is more room on the upside as far as Muthoot Finance is concerned. One should definitely look at the stock for targets of 1150 to about 1200.
Okay, continuing with the financial space, but switching to the broking sector, when JM Financial is the third counter in focus on the back of the earnings this time around, which have been on the weaker side, and that's why you are seeing the stock drifting in the red, because this time around the consolidated revenue from operations has been at 846 crores versus 809 crores on a YOY basis. That's a jump of 4.5%. But look at the profit figure. There has been a hit wherein the profit was just 32.5 crores versus 229 crores on a sequential basis. Along with that, the company has also recommended a final dividend of 0.9 rupees per piece. And we are seeing a cut on JM Financials, and that's the counter in focus.
Okay, let's move on. And Aditya, the next stock that you've picked out for us is Grasim. Now, from those 1300 levels in the last year sometime, we saw a sharp up move coming in and currently trading somewhere around the 1700 levels. Do you think it's still the right time to buy Grasim, or would someone actually look to book profits now?
No, Vinny, I still believe there is more room on the upside as far as Grasim is concerned. Mind you, most of the cement stocks have done well for themselves recently. I believe Grasim has a lot of catch up to do as well because some part of the revenue comes from business as well. It is approaching a immediate hurdle of 1719, which happens to be the upper end of a triangle pattern. Once it sustains beyond this level of 1790, 1800, I believe stock can easily test its all-time high of 1900 in the near term. Will be more of a positional trade, but I believe one should definitely hold on to the stock if already has in their portfolio. Otherwise, one can look at accumulating pressure at current levels as well. Along with that, technical indicators also suggest the sustained up move in the stock is going to stay here and continue in the coming trading sessions as well. So overall, looks very positive for Grasim Industries in the new winter.
Positive for Grasim Industries, but let's switch sectors now. And Ashesha, coming to you for the next one, you have picked up L&T, a result candidate. Results expected today. What is the street expecting this time around?
Well, yes, L&T will be reporting its numbers post-market hours today, and we are expecting a decent set of numbers. Revenue growth is expected to be aided by both core as well as non-core businesses. We are expecting revenues to come in at about 59,250 crores, which will be an uptick of about 12% on a year-on-year basis. Margins are expected to be largely stable. We are expecting margins to come in at 12.4%. Remember, input prices were not favorable, and hence margins are largely expected to be flat on a year-on-year basis. Order inflow, meanwhile, could stand at about 70,000 crores, and this will be led by hydrocarbon, building and factories, power TD, and metal sectors this time. As far as management commentary is concerned, commentary on margin trajectory, raw material pricing trends, and green energy order inflows will be crucial. All in all, decent set of numbers are expected. I will be reporting its numbers later today.
Move on and talk about L&T Tech then. This IT name, Aditya, how is it looking on the charts? Is it the right time to enter the stock now?
Yes, Vinny. In fact, if you take a look at most of the mid-cap IT names, they have outperformed the large-cap names. And it has been so the trend for past couple of months. Now it's time to look at LTTS. Definitely very strong on charts. Stock continues to make higher highs, higher lows, which confirms a trend reversal in favor of the bulls. At current levels, one should definitely look at accumulating the stock. The recent correction also, in my view, halted at the previous peak. So definitely looks very strong on the charts. Can easily test levels of 4,050 to about 4,100 in the near term. And risk to reward is also in favor of going long. RSI 2 suggests a strong bullishness here present in the stock. So definitely look at going long on LTTS.
Okay, moving on, and Harsh, coming to you for the next one. The stock which is under tremendous pressure today is Latent View. Tell us, why is that so?
After a weak set of numbers right off the bat is what I can say. Consolidated revenue, in fact, down 3% quarter on quarter. It's coming at around that 141 crore mark. We're seeing EBITDA also contract quite sharply. From 43 crore, it's down to 30 crore. So a 30% reduction when it comes to the EBITDA sequentially. And clearly that's reflecting on margins as well. Margins have come off from nearly 30% all the way down to 21.5%. So we're seeing a huge amount of margin contraction and clearly visible there. In fact, when I'm looking at the last 5 to 6 quarters, we haven't seen these kind of margins, and the contraction has been extremely steep. The next lowest margin number that they had clocked was in Q2 of FY23, and that was at 28.2%. So this is a far cry from that, and you can see the impact of that on the stock as well. And profits also down 35% on a sequential basis, down to 34.2 crore versus that 52.5 crore number same time last quarter. So what was reflecting just a quarter back, now completely different image coming through, and you can see that impact has come on the stock price as well.
Okay, that is Latent View for you, clearly under pressure today, down 11.6% as we speak, lowest point of the day. But let's talk about Havells on the charts, Aditya. Is it looking interesting to you? Summer season is almost here, and finally, after those unseasonal rains, you're seeing that summer's here. What should we be expecting from Havells? Time for a good move?
Oh, absolutely, Vinny. Time for a very good move on Havells. In fact, it broken out from a narrow consolidation phase, and after a recent up move, stock again tested its 200 DMA from which it had broken out, and now it's heading higher again. So it looks very strong on charts. One should definitely look at adding on to Havels. And as you mentioned, summer season is here, and these stocks tend to usually outperform during the summer season. One can add at current levels, look for a target of 1350, 1360. On the upside, easily doable, and once it crosses 1360, I believe 1450 is also something which can be achieved. So it will be more of a positional trade, but one should definitely look at Havels adding onto the portfolio. Volumes have been good in the recent up moves, and RSI too is comfortably sitting in the bull zone, which suggests strong bullishness going ahead.
Okay, well, let's move on and let's focus on some of the earnings candidate. Five-star business has come out with its numbers. It was a strong set of performance this time around, where the NII on a YY basis have seen a jump of 38%, while the profits grew by over 40%. And if we look at the NIMs, they have now been at a number of 18.5% versus 16.8% same quarter last year. So good set of numbers by Five-star. The stock did open in the green, but with the market sentiment has now been seen to be drifting lower. But let's connect with the management and understand the business outlook ahead. Onto the show, we are being joined by Lakshmipathy Deendayalan, who is the chairman and managing director at Five-star Business Finance. Hi, very good afternoon. And the first question, let me take it up on the NIMs itself. Your NIMs have improved by over 160 basis points. So, and we did see the regulatory caps being removed last year. Is that the major driver for this improvement, or this is the nature of the business? What's your view on this?
So good afternoon all. So my NIM is always on little upper side because this is nothing to do with the regulatory cap, because I'm thinking that only for the microfinance sector there was a regulatory cap and that was being removed now. But for NBFC there was no regulatory cap. Why the NIMs of Five-star are always better is the category of customers whom we deal with. As I said in last show also, Five-star is a niche player who gets into tier 3 to tier 7 towns and brings the customers from informal lending to a formal lender like Five-star. So if you see there's a low competition. It is not a crowded market. So we take the advantage of 20 years of presence in this market, and we fairly price it well. Even from the pricing perspective, if you compare the pricing what they get from a lender to Five-star, it is almost 50% knockdown. So from a customer's perspective, they are very attractive and happy with the pricing what we give them.
Right, Mr. Deendayalan. This is Vinny joining in the conversation as well, and a very good afternoon to you. I just want to talk about one more thing is that, now banks have actually started passing on those higher costs to the NBFCs. Do you expect to see any moderation in the NIMs because of that going forward, or would you be maintaining these levels?
Even from the liability side, we are very fortunate that our borrowing cost is dropping down quarter on quarter. Only in this quarter, if you take last 1 year where RBI increased the repo rate, from that time to now, only in last quarter we saw a small increase from our borrowing cost, which moved from 9.1% to 9.5% incremental borrowing. Rest of the time our borrowing cost was down. If you see the cost of fund from the book, it is still dropping at from 10.5% to 10.1% in this quarter. So we don't see any more increase from banks to NBFCs, because I think the price hike curve is peak. We will see some kind of stabilization here to prevail. Maybe we can see a slight cuts, maybe the end of this financial year. So I don't see the cost of borrowing for Five-star to go up, and we are very comfortable with this.
Okay, but when we see your AUM growth, that has been very strong over the years, because back in FY15, when your AUM was close to 130 crores, it has now been close to 7,000 crores, and every financial year we have seen an improvement of either 1,000 or 2,000 crores getting added into your AUM. Tell us for FY24, what is the guidance and how do you see the AUM shape up going ahead?
Yeah, before getting into the guidance, the market, what we look into is close to 22 trillion market opportunity in our country. That's the credit demand of single small shopkeepers, self-employed credit need comes from. So taking that number into consideration, what we have grown is not even a dot in that. But having said that, Five Star was growing at close to a good increase pre-COVID. During COVID, our growth was curtailed around 15%. Now we are bouncing back to the pre-COVID levels. I think that is where you see financial year 23, we registered a 37% growth year on year. Having said that, we see a very strong opportunity, and we had a very superb execution team at the level. So we can easily cross 30% plus in short term, in next 2 years or next 5 years also. The market is abundant. We are able to execute the perfection well, and our asset quality is one of the best. So we don't see any hurdles to do less than 30% in years to come.
Asset quality among the best and don't see any hurdles, but there is a concern, Mr. Deendayal, that despite lending to those low income groups, where you see maybe given this current time there could be a default chance which is higher as well. How would you be able to maintain the asset quality? What are you taking as measures for that then?
See, the first point what I wanted to clarify is our ticket size is around 3 to 3.5 lakhs. So we are not lending big tickets to this segment. So as the ticket size is smaller, the EMI also tend to be smaller because we give them 7 years tenure of their choice. So the EMI is as thin as possible. So they don't feel any big burden as if something happens to their business or the family, which often it takes once in 2 years or once in 3 years, we don't see any other specific disruption happening in their lifestyle or the environment, so that our asset quality really worsens. So we don't see that to happen, and we are being with them for last 20 years. So our clear belief is we don't want to see defaults. If there is a little bit of delay, we are here to observe the delay and give the comfort to the customer, and it will be paid once the tenure gets completed. So we are very comfortable.
Okay, Mr. Deendayal, thank you so much for joining in with us this afternoon, giving us an understanding on what should we be expecting from the business going forward as well. Thank you so much for that. Five Star, as of now, slipped into actually moved up to the green side. When we started the interview, it was a bit in the red. But let's move on. The flashes on your screen, that is Sanofi India. Pull up the charts for that. That is buzzing in trade. And what has come in as an announcement right now that Sanofi India is to demerge its consumer healthcare business into a unit. And mainly what will happen now is that Sanofi India holders will get one consumer unit share for each share that they are holding as of now. So this is in terms of the demerger that they've announced for the consumer healthcare business into a separate unit, and each holder will get one unit share each for the holding that they are there in Sanofi India. As of now, the stock is trading with gains of 2.7% in trade. Yes, in the morning trade also we've seen it continue. So that gain has continued as of now for Sanofi India. Let's move on and talk about IndusInd Bank then. Now, IndusInd Bank is in focus. We have a note that has come in from UBS this morning, where they are giving a target, increase the target price for IndusInd Bank as well. Now, just in terms of the note, that what the note is highlighting, they've upgraded the stock to a buy, given a target price of 1,450 rupees per share. Furthermore, what they are highlighting in terms of the credit cycle, the benign corporate credit cycle and the peaking of interest is favorable for IndusInd Bank. UBS also expects that the benign corporate asset quality environment is to continue as risk from microfinance segment is subsidizing. I beg your pardon. Subdued, as well as they think IndusInd Bank should be able to report a much awaited decline in terms of the credit cost in FY24. Furthermore, what they are also saying is that given the relatively higher fixed rate loan book and higher than peers non-retail deposit share, they believe the decline in interest rate would place IndusInd Bank in a relatively better position, especially on the NIM front versus its peers as well. So that is why the positive on IndusInd Bank, they've upgraded the stock from a previous neutral rating to a buy rating, and a target price also, which they've increased from 1,250 rupees to 1,450 rupees.
Well, yes, absolutely. That's the brokerage note on IndusInd Bank. But Aditya, this particular counter is also on your radar because in the past 2 days, the stock has actually surpassed the levels that we have seen on the Friday session just before that sharp fall. So UBS is targeting 1450. What are your targets?
So I got a smaller target to start with. Maybe a 1300 is doable immediately. Once it trades beyond 1300, then definitely there's a case of 1450 as well. A strong chart within the banking space. If I have to take a look at any of the banking space, private sector banks, it will be an IndusInd Bank and Axis Bank. And IndusInd Bank clearly stands out. It has broken out from a bullish cup and handle pattern on very good volumes. Looks like finally the stock will test its previous all-time highs with an intermediate hurdle at 1300. Smaller term moving averages are crossing over larger term moving averages. I'm sorry. Therefore, all in all, looks very good for the stock and should be bought in portfolio.
Okay, that's the outlook on IndusInd Bank. We're moving on to the next counter. Onto the result updates. Everready is the next counter in focus, and this time around the weak set of performance continues for this particular company, wherein once again the company has reported a loss of 14.4 crores versus 38.4 crores that we have seen in the same quarter last year. But look at the move and the growth in the consolidated revenue of the company, which is now up 18% on a YY basis at 286 crores versus 241 crores. So what we are seeing is that the revenue has seen a jump and the loss is getting narrowed with almost 40 crores last year to 14.5 crores. So that builds an expectation that going ahead the financial situation can improve and the revenue is also moving in that tandem. So that was Everready.
Okay, moving on to the next stock that we'll talk about, that's Macrotech Developers. Aditya, finding it interesting to buy now?
Oh yes, Vinny, and in fact a lot of these real estate stocks are buzzing. I believe it's time to look at a real estate stock, and if I have to pick one, it has to be Macrotech Developers. Good volumes, broken out from a narrow consolidation, heading to its immediate hurdle of 200 DMA, which is at 1005. Once it crosses that, I believe stock can easily test levels of 1100 as well. Technical indicators to suggest the strong bullishness building up here. So definitely look at Macrotech Developers, buy at current levels, add more once it crosses its 200 DMA, which I believe so will do in the near term. So definitely looks very strong on charts.
Okay, let's move on to the stock number 13 in focus, and that is Birla Corporation. Let's go to Ashesha to find out why is this counter is in focus. Ashesha.
Well, yes, this counter is in focus on the back of their results, which they reported yesterday post-market hours. The stock, in fact, as we speak, is at the lowest point of the day. Revenue from operations for the quarter gone by stood at 2,463 crores, which is an uptick of about 9% on a year-on-year basis. Margins have contracted this quarter. They've come in at 11.1% versus 12.2% that the company reported same time last year, which means on a year-on-year basis, margins have contracted by about 110 basis points. As far as profitability is concerned, that has also seen a decline. Profit after tax has come in at about 85 crores versus 111 crores that the company reported same time last year, which means about 23% decline is concerned. Decline is what we have seen as far as bottom line is concerned. Weak set of numbers, the stock is reacting. It is off the highest point of the day as we speak.
Okay, let's move on and pull up the charts for Hindustan Unilever. Aditya, this FMCG major, are you finding it exciting? You know, obviously in terms of returns, when you look at it in the last 6 months, HUL has been quite flattish, not much of an exciting move there. Are you expecting a run up here?
I think so, Vinny, because it's time HUL should move. We have seen names like Britannia, Nestle, all of them outperform in the near term. HUL is something that's been underperforming big time. Chart setup is all looks like it's ready for an up move. It is so, and it's almost on the verge of a breakout from a downward sloping channel. Resistance is at 25.35. Once it trades beyond 25.35, I believe stock will resume its uptrend and can easily test levels of 2600 in the near term. High time stock should outperform. Risk to reward is in favor of going long, taking support at major moving averages, and technical indicators to suggest a good up move is coming in the near term. So definitely look at HUL with a target of 2600 in mind.
Okay, 2600 is the target coming in for HUL. But moving on to the next counter and sticking with the FMCG space, Harsh, coming to you. You have picked up Godrej Agroware. Tell us what is the news flow on this one.
Well, yes, I mean, this is a company largely in the animal feed sector. So what we're seeing currently is a largely declining trend coming through. We're looking at revenue which is absolutely flat on a year-on-year basis, 1% higher, 2,095 crore versus that 2,081 crore same time last year. We're also seeing EBITDA come off sharply on the back of that. We're seeing a lot of pressure with regard to that. It's down 61% year-on-year. 87 crore is where the EBITDA number has come in at this time, which was at 222 crore same time last year. And therefore you can see declining margins as well. Margins have declined from 10.7% to 4.2% year-on-year figure again. And what we're also seeing therefore is profits have declined by 80% plus on a year-on-year basis. From that 140 crore mark, profits have this time come in at only 23 crore. And on the back of that, you can see pressure on the stock, down nearly 4% as we speak.
Okay, let's move on and talk about an earnings candidate, BASF. Like you can see flashing on your screens, Q4 numbers seems like a weakness coming in over there. Profits of the company have almost half, down 45% on a year-on-year basis, just coming in at 82 crores. Revenue of the company also down by 3.3%. Nothing exciting in terms of the operating performance of the company. EBITDA down 8.5%. Margins a sharp contraction of 233 basis points, and you're seeing the stock has seen a sharp fall coming in when the numbers were announced, down 4.25% as we speak.